Right, let's start off with Tesla taking a tumble. Investors zeroing in on the automaker's shrinking margins as the price war it started takes a bite. CEO Elon Musk laying part of the blame on the macro environment. Here's what he had to say on the investor call. Take a listen.
It is worth pointing out that the current macro environment remains uncertain. I don't think I'm telling anyone anything people don't already know, especially with large purchases such as cars. And while we reduced prices considerably in early Q1, it's worth noting that our operating margin remains among the best in the industry. We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin.
Wall Street taking Tesla to task on their earnings. So is the stock a good buy or a good buy? Here with more, Yahoo Finance's Pras Subramanian. What do you think, Pras?
You know, it's really just a big bull and bear debate here, tug of war between people that think that the gross margin floor is the concern. They can't maintain that 20%. They dip below that to 19.3. This is a problem. The company is valued at a automaker with such industry-leading gross margins. So what do we do there? Versus the other side of it is that this is a mature company. They are looking at sort of a very uncertain macro, like Elon mentioned, and they're sort of navigating it correctly. And that's sort of what Gene Munster of Blue Ventures said. That he says that he's giving investors confidence out there that they're doing a good job navigating it. So that's kind of the debate there. But I think as of right now, the bears are winning. The stock down a lot today. There's a lot of concern about, is demand a problem? Is that why there's so many price cuts here? Can Tesla weather the storm? Are they going to be able to make up for these price cuts with more expensive subscription and software offerings? So we'll see if they can do that. But I think this is the question: is what's next for Tesla? Is it going to be this more mature company, not a high-flying tech company, but more of an automaker that sort of leads the way in EVs and is willing to take a profit cut in order to boost or expand their market share?
And that is the debate. I remember last year in February, Musk tweeting, Tesla is as much a software company as it is a hardware company, both in terms of cars and factories. He says this is not widely understood. But when you look at the behavior of the stock, does it perhaps tilt more in one direction than the other at this point?
I mean, right now it's tilting more down, a little bit being weighed down here. But let's be honest, the stock was up 50% in year to date before today's earnings. So there was some room for maybe some profit taking. People kind of wanting to lessen exposure on the uncertainty of what's happening as new competition kind of comes to the fore with new EVs, cheaper EVs. The Chinese market is very, very competitive. So I think that's the kind of concern with Tesla. But let's be honest. Elon Musk said that the Model Y was the highest selling vehicle overall in Europe and in the United States. We're not counting pickup. So there is some positives there. But I think right now it's the concern that the profitability is coming down, and that's going to kind of make the value of the stock. I mean, you mentioned the most valuable car maker. Is it still going to be that today or tomorrow, right?
Right. We'll continue to track that. It was an interesting story with Tesla. Thanks so much, Pras Subramanian, there for us.